Chapter 5 in QuickBooks Online deals with customers and sales. So I'm going to start by clicking Sales on the left and taking a look at what we've got. So we have All Sales tab, and then Invoices, Customers, Products and Services. We've talked a little bit about products and services and what we offer. Again, here's that list. You can get to this products and services by clicking here, and you go the same place. So gear icon and then products and services, or you can go through the sales menu. Okay, so you'll be adding some of those. We've looked at that before. You'll be doing that some more in this chapter. But you're also going to be dealing with customers and adding customers. Adding a new customer is very much like adding a new vendor. When you click new, you've got the entry forms to fill in all the details about that customer. And then the reason you have invoices separate from all sales, remember invoices are used for customers who you've decided to allow them to have terms. So maybe they have net 30 terms, which means if they charge something today, it's due in 30 days. And so you have accounts receivable from those customers. And we can see here that we have $1,525 overdue in accounts receivable, and then another $3,750 some odd dollars that is due but not overdue yet. This is a big deal for a business. That's a major cash flow issue, and so it's something you've really got to pay attention to. All sales are going to show those invoices, but it's also going to show payments from customers and sales receipts. I don't see any. There's a sales receipt. Any kind of transaction that has to do with the sale. So right quick, we're going to create a invoice to a customer. We did a sales receipt in one of the previous videos. We're going to do an invoice here. So we'll bill to Amy's Bird Sanctuary, and let's change this date to October the 10th. And look here, terms for Amy is net 30, and so it's going to be due on 11/9. You can always change that with the drop down box, but this terms is one of those things you can set up for a customer. Notice that since we chose Amy, it's also going to pull in any billable time that we have. So when we click add here, we've kept track of billable time. So we have charged 5 hours of labor. We've kept track of that, but we haven't actually invoiced it to Amy yet. So, and then also Amy wanted us to bring some rocks, so just some garden rocks, and so we're going to send, these are those great big garden rocks, we're going to send 10 at $100 a piece. Okay, and so now we can save and send this bill. Notice the default in QuickBooks Online is to send via email, so it automatically pops up her email address and the pre-formatted email that we would be using, which of course we can change that if we want, and then it attaches that invoice. So we're just going to say send and close, and it's again giving me an error because I'm using that test drive account. But okay, so let's now pretend that Amy has gotten that and decided that she only needed 8 of those rocks. And so she needs to return 2 of those big $100 rocks. And so you've got a couple of things here. We've got this credit memo, and then we have this refund. Those both can be used to return an item, but you use the credit memo when you've billed on an invoice. You use the refund receipt when you've billed on a sales receipt. So the refund receipt, you're going to give them back cash, check, or credit card, whichever your policy is on a refund. But on a credit memo, we're just giving them credit on account, and that's what we need to do here for Amy. So we do credit memo, and we're going to choose Amy's Bird Sanctuary. We'll change this to the 12th. So a couple days later, she decided that she didn't need 2 of those $100 rocks. And so now it's going to show 216. It applies the applicable tax. And again, we can go through that save and send process to get this sent over to Amy. And now when it's time for Amy to pay her invoice, so let's fast forward, and it's 11/9 when those are due. Okay, so we can go to receive payment, and we'll choose Amy, And notice now we had this one that's due 11/9. It's been reduced, okay, by that $200. So we can check off everything that Amy owes us, or we can just check this one, okay, and we need to change this to November 9th. I believe that's what we said when that was due. And we can receive that payment in. So that's kind of the cycle for, now if you look here, you can see that these are closed. Credit memo, we can show that it's paid and those invoices are closed. So instead of showing open, like this invoice, that means it hasn't been paid. So if you're looking through here at ones that are open, we can click on something like this, receive payment, and it automatically loads Mark Cho and that invoice, and then you can mark it, save it, and now when we go back we can look for that Mark Cho one. Right there, and it shows closed. So that's how the basic customer stuff works. Now I mentioned earlier that you need to pay attention to this overdue. There's a report that's pretty common that people use. A lot of business owners are going to use this, and it's called Accounts Receivable Aging. Now, let's figure out how it's stored in here. We'll scroll down through these reports and find it. It's in this Who Owes You category. So we've got an Accounts Receivable Aging summary, so we'll click on that. And now we can see that we have Amy owes us a little money, Bill's Windsurf Shop. Now these current ones, these are the ones that have been billed but they're not really due yet. These are the ones that show when they're older, and the older something gets, the harder it is to collect. So that's why it's important to keep an eye on this pretty frequently. So this AR aging summary is an important report, so it's one that you want to run pretty often. I'm going to go back to my reports list and notice that it hits here in the favorites. I didn't click on that before because I wanted you to see that you've got all these reports down below, and if you put a check in this, or if you click in the star, it'll move it up here to your favorites, the ones that you want to use really often.